Thank you, Laura. Good morning, good afternoon, everyone. It is my absolute pleasure to be moderating today's first technical session, which will be on climate-related risks guidelines. We will have the opportunity to showcase two of the most recently and inspiring regulatory initiatives from the Central Bank of Seychelles and State Bank of Pakistan. So as you already know, climate change creates risks to firms, especially to financial firms, and regulators and supervisors across AFI network are increasingly embedding climate considerations into their supervisory tools and approaches. They are increasingly requiring supervised entities and financial institutions to integrate climate-related risks into existing framework, especially into governance, strategy, risk management framework, analytical tools, but also into more revealing disclosures. So in today's session, we will have the opportunity to further discuss practical supervisory design choices when it comes to implementing and designing climate-related risks guidelines, and also to discover and explore so tools that are at the core of our. Hello, can you hear me?
Hi.
I can hear you
So
now,
that
yeah.
it was me. I think it was a little bit broken, but yes, now we can hear you.
Okay, I don't know where it stopped for you, but I was touching upon the key objectives of today's session. So we hope that by the end of this session, you will gain a deep understanding of both climate-related risk management frameworks and disclosure-focused regulations to compare both frameworks, but also explore how climate risk supervision can be aligned with inclusive green finance objectives. I have also a deep understanding of the key pillars of both frameworks, but also gain some peer insights on implementation challenges on implementation, especially in frameworks that are quite similar in all of our countries, where we are usually lacking institutional framework, where it's weak, we are lacking also expertise and data. Without further ado, please join me in welcoming both Cyril Bonoatoa, who is Senior Financial Surveillance Analyst within the Financial Regulation section of the Financial Surveillance Division at the Central Bank of Seychelles. He is currently the acting team leader for the newly established Payment System section and the project manager for financial sector development. So as part of his role, he is responsible for policy and research projects with the aim of ensuring a sound and stable financial system through developing and implementing both banking, non-banking, payment system, climate change, sustainable finance, and digital financial services frameworks and policies. It's such a pleasure to have Cyril with us today, and we'll start by sharing his presentation on the Central Bank of Seychelles' journey into implementing climate-related risks management framework. Over to you, Cyril.
Thank you, Najwa. Good morning, good afternoon, and good evening to everyone from wherever corner of the world you are. So for colleagues who are in Seychelles last year, I'm so sorry, there will be a bit of repetition of what I presented last year, but there will be an element of extension in terms of additional work that we've done in terms of climate-related risk management. So next slide, please. So the presentation today will focus on the risk management guidelines, and together with the disclosure guidelines that we've issued to the banking sector in December last year. So these are two complementary documentation. They work together side by side, given that aside from ensuring effective risk management, there is a need for the financial sector to also disclose in terms of what they're doing as regards identifying, monitoring, and managing climate-related financial risk. Next slide, please. So within the context of the Central Bank of Seychelles, we sort of take an implicit mandate when it comes to climate change under the umbrella of our financial stability mandate. So we did effect amendments to our Central Bank Act in 2024, wherein aside from the sort of overarching mandate of the central bank, we've now expanded in terms of our sort of secondary functions as a central bank. And under this law now, we do have sort of integrated sort of the micro macro supervision of the financial sector. And this is whereby then we've sort of trickled down the element of climate-related financial risk regulation and supervision. So the guidelines that we've developed, they are intended to be applied on a proportionate basis. We've taken into account the context of the jurisdictions, the type of entities that we have in the market, where they are in terms of climate readiness, as well as in terms of capacity and development. So in this context, we consider the size, nature, and complexity of the institutions, as well as their overall risk appetite and tolerance. Next slide, please. So within the broader scope of the guidelines, just to note that we've issued the guidelines on the basis that they would not yet be mandatory. We've given the financial sector a three-year transitional period for them to sort of start implementing the requirements of the guidelines. We've also opened it up to all of the regulated entities that fall under the Central Bank of Seychelles, that being the commercial banks, credit unions, or SACCOs, as known in other jurisdictions, as well as non-bank credit granting institutions such as development finance, mortgage finance, microfinance, and the likes. So this is also why we've adopted a sort of proportionate approach to the adoption of the guidelines. So the purpose of the guidelines in itself is to basically just provide guidance to the entities so that they all follow sort of the same minimum requirements when integrating climate considerations into their governance strategy and risk management considerations. It enhances and strengthens the resilience of the financial sector to the climate-related risk, as well as supporting the global sort of national agenda of Seychelles with transitioning towards a low carbon economy. In this context, it means we also refer back to Seychelles' nationally determined contribution under the Paris Agreement. It also serves to address any weaknesses in the management of climate financial risk, mindful again that it would depend in terms of where your jurisdiction is in terms of onboarding climate-related financial risk. And given that within the context of Seychelles, this is still relatively novel and nascent, so we've also taken that into consideration. Next slide, please. So as I've mentioned, in terms of scope and application, these are the entities that are applicable in terms of implementing the guidelines. And again, it is to be applied on a proportionate and risk-based basis. Next slide, please. So now when we look at the requirements, so I will discuss this in terms of both the risk management and sort of disclosure element. So in terms of governance, as one of the sort of main guiding pillars under the guidelines, so all of the regulated institutions would need to highlight and disclose the responsibilities of their board of directors and senior management with respect to effective risk management of climate-related financial risk in terms of even building internal capacity, both at senior management level, board of directors, and within the global context of the entity, and that there is the element of accountability on the board as the main sort of guiding governance element within an institution. We do integrate the element of strategy and risk appetite. So there is a need for the board and the senior management team to identify and determine their level of risk appetite in terms of climate-related financial risk, and how this also trickle down in terms of the level of authority within the organization, and even in terms of their loan portfolio. For instance, what is your level of risk appetite overall for the institution? And then say you trickle it down to specific sectors in terms of your loan portfolio. maybe the risk appetite might be different from for different sort of sectors. We also consider the three lines of defense. For those who are familiar with sort of audit, compliance, and risk management. So there is that element of three lines of defense that the regulated institutions also have to put in place when looking at climate-related financial risk. And all of these requirements, this is where then the disclosure guidelines come in terms of they are required to disclose all of this information as part of their annual financial statement disclosures. So all of these elements would need to be disclosed once they sort of start building on in terms of integrating climate within their frameworks, especially in terms of their enterprise risk management framework. Next slide, please. As I've mentioned, so the other element is risk management. So generally, we are proposing sort of an integrated approach, mindful that, again, it would depend on the jurisdictions and the level of integration within your banking sector. So rather than having the entities create sort of new distinct sort of committees, such as a committee to the board that looks at climate-related financial risk, we have enabled them to consider embedding it within existing sort of committees that they have. This would also then require amendments to their committee terms of reference or internal, as I've mentioned, enterprise risk management framework to onboard climate. So again, they would need to disclose these information for us to have sight in terms of are these elements really being considered. And we've gone a step further to also require that these documentation are approved by the board and signed off by the board members to ensure that there is that commitment at board level to integrate climate within the regulated institution. Again, this trickles down to the compliance function and the internal audit function in terms of the three lines of defense, in terms of their respective roles and responsibilities as regards climate-related financial risk, especially for the internal audit aspect, whereby obviously they need to then conduct their own internal audit processes, because obviously as regulators, we will then conduct on-site and off-site review of climate-related financial risk as an additional sort of element within the overall risk-based supervision framework. Next slide, please. We've also included an element of business continuity, mindful of the consequences of climate-related risk events that can have an implication on business operations, but also in terms of your loan portfolio, investment portfolio, and the likes. So there is a need for the banks as well to ensure that climate-related financial risk are integrated within business continuity plans and procedures, including considerations for matters related to outsourced functions. So as regulators and supervisors, you are aware that in certain circumstances, we do allow regulated entities to outsource certain functions. So there is that element as well that comes in. If the outsourced function is impacted by climate, then how you as a regulated entity would sort of tackle and mitigate this issue. So there is that level of requirement for them to incorporate this within their business continuity plans and procedures to ensure that there is continuity when climate disasters occur. In this case, there's also the element that comes in from a climate scenario perspective. So especially within the context of Seychelles, greater emphasis is being placed on physical risk, given the characteristic of the islands. So most of our sort of risk level that we're seeing is in terms of physical risk. It doesn't mean that we're not looking at transition risk, but at this point in time, this is not necessarily an element that we're placing great emphasis on at the beginning, again, given that the banks are still new to this concept. So when it comes to transition planning, we're not, more or less not actively going that route for now. As you're aware as well, if you have a risk-based supervision framework, there is the element of your ICAP. So we've again discussed this with the banks to ensure that as part of this process, they also consider climate-related financial risk into their ICAP to ensure adequate coverage to exposures. Next slide, please. So in terms of scenario analysis, again, this is a requirement for the banks to start conducting and looking at scenario analysis. For this, we've given them sort of the horizons to look at. So we have short term, medium term, and long term. Whilst I've stated 3 to 5 years, for short term, it's up to 5 years, and then I think it's 10 years, and then over 15 years. So rather than keeping it open for them to decide, we've basically given them specific sort of time horizons to ensure that once they disclose this information, we then can, from a central bank perspective, be able to compare the findings and the results to ensure that there is that level of comparability across the financial sector when we're looking at these data information based on scenario analysis and stress testing conducted by the respective regulated entities. On this aspect as well, there is a requirement for the banks to also provide us with information about the different sort of metrics that they're put in place, how they've identified the metrics, why those metrics, and if there are any changes over time with sort of those metrics, why the changes. So all of these elements, they would need to disclose as part of their disclosure requirements. Next slide, please. So what we've done, as I've mentioned, we've given the banks a 3-year transitionary period. So after the 3 years, the guidelines will become binding. When we say become binding, we are now going to initiate work to issue regulations to make these guidelines become binding. We've also given them sort of like as a first step to provide an action plan on how they will go about to implement the different requirements under both the risk management guidelines and the disclosure guidelines. And they will be submitting their first action plan in June this year, and then subsequently provide us on a biannual basis with updates in terms of the progression in achieving the action plan. So as part of that, we've built in a disclosure template, as you can see on the slides, and they submitted their first disclosure template early this year on January 15th. So they are required to submit this annually alongside what they're doing with their action plan for us to see the progress in implementing the different requirements under the risk management guidelines and disclosure guidelines, for us to take stock on the progress being made within the financial sector. So this template captures both quantitative and qualitative information, as well as data on physical and transition risk. It captures also geospatial data, more granular data in terms of district level information within the region, for us to have a better idea in terms of where really within sort of the region, whilst yes, within the context of Seychelles, we know the coastal region is more impacted, but there is also the issue of landslides more within the islands. So just for us to have a better idea where the exposures are sort of more pronounced, and see how the banks are managing these level of exposures. So given that within the climate space, we know that standards and best practices are still evolving. So with what we've mentioned within both guidelines is that whilst these standards and best practices evolve, we will be continuing the discussions with the regulated institutions to see how we can implement and amend and enhance the guidelines. And just to note, for our disclosure guidelines, we've more or less mirrored the recently published Basel voluntary disclosure framework. So this is what we're using. Even for the disclosure template, it mirrors the requirements as articulated within the Basel framework. We've also looked at the ISSB standards. And within the scope of that, given for the S2 standards, for the banking sector, it might be difficult for them to get those information and data. So for now, we're not again placing emphasis on the need to capture S2 related requirements, but focus more on the S1 standards for now. So as things evolve, then we will sort of bring in the other elements because as I've mentioned, it's good for you to know your country context because for us, unfortunately, we do not have a national accounting body who sort of issues in terms of implementation of IFRS standards. So we can do it for the banks, but then it becomes an issue then for the other businesses, individuals to onboard these standards, hence why we're not necessarily moving to S2 standards because the banks might find it difficult to sort of get those information. So that's why we're focusing on S1 standards. So that is generally it, what we're doing from the Central Bank of Seychelles, and I'll be happy to take any questions or feedback that the team has. Thank you.
Thank you, Cyril. Please join me through a round of applause to this quite detailed and informative presentation on the experience of Central Bank of Seychelles into establishing climate-related risks requirements through definitely a risk-based, integrated, but also phased approach. So this provides a baseline which is actually suitable for small island developing states and provides a great example on how we could align national climate agendas with international standards. So thank you, Cyril. I don't know if we have any questions at this stage. We will also have enough space by the end of the session for your questions for both presentations. So with that, I think that I will hand over also to State Bank of Pakistan for a different experience sharing on climate-related risks management. And please join me in welcoming Uzma Mansour. Uzma Mansour is the Joint Director in the SME, Housing and Sustainable Finance Department at the State Bank of Pakistan. She brings a very extensive experience. It's over 18 years of cross-functional experience spanning banking conduct and consumer protection, human resources, and sustainable banking with exposure to both public and private sector institutions, including commercial banks and insurance companies. So she has also been supporting gender inclusion, environmental protection, and sustainable development, and working closely with multilateral partners, including IFC, World Bank, to advance the green and sustainable finance agenda in Pakistan. So over to you, Asma, to hear more on the experience of the State Bank of Pakistan in implementing and designing regulation on climate-related risk management. Thank you.
Thank you so much, Najwa, for such a good introduction. Thanks a lot. And thanks, Cheryl, for such a informative and interesting presentation that you just gave. So most of the work that I was supposed to do, you've already done that. It's in Pakistan, it's 37 past 5 in the evening. And across the globe they've logged in. So good morning, good afternoon, good evening, whatever the time is in your country, in your zone. So let's just because we have Cyril has already warmed up the listeners about the risk management guidelines of Central Bank of Seychelles. So that's just without I mean, as Cyril, yes, rightly said that it depends on the jurisdiction that you are in. For a small island state, it's different, and for Pakistan, it's kind of different. So I'll just ask the moderator to change the slide. So the first slide that I've put in my presentation deck is about the strategic relevance for the developing countries. So we all here are the developing countries, and the problems more or less are the same. So we have, as Cyril also pointed out, that the real focus at the moment is on the physical risks rather than transition. It's there, but we definitely have the acute physical climate risk is the major focus even for Pakistan, where our focus is on adaptation and transition planning is definitely there, but the main focus is on physical risks because we've been facing real bad, flood-like situations, heavy rainfalls, glacier melting. There is a lot of problem, in terms of the physical climate shocks. Then we have concentrated sectoral exposures. Most of the developing countries have that. Like for us, it's agriculture and SMEs. In developing economies, SMEs is really, really badly hit if it's a climate event that occurs. Our infrastructures in the developing countries is generally weak if we compare it with the developed countries. So we have, the kind of so the kind of problems that we are facing is more or less the same. And definitely we have limited fiscal buffers, fiscal space available. So this is how we share the common ground to start off with, and why it is very important for the developing economies to have their climate-related financial risk management guidelines in place. Next slide, please. So I just spoke about a few of our problems, the kind of climate shocks that we are exposed to. For last 2 decades, Pakistan is amongst the top 10 countries most vulnerable to climate change. You can see it as per the climate risk index. And the report's estimated reconstruction cost is one of the costliest in the world history when the floods and the weather events hit us in 2022. And what it has, it has a very serious impact on our long-term economy. The Pakistan Economic Survey says that combined risk of extreme climate-related events, environmental degradation, air pollution are projected to reduce Pakistan's GDP by 18% to 20% by 2050. This is the kind of issues that we are facing. I am sharing all this just to build a country perspective and the context so that, these are all the complexities that fed into what we have come up with the guidelines actually. Next slide, please. So when I spoke about concentrations, sectoral concentrations and sectoral exposures, well, this is what I meant, that we are badly hit. The crops, the crops are badly hit in case of floods and the droughts that we face in Pakistan. Agriculture sector contributes 20% to the country's GDP and employs half of the workforce, and is the largest source of export earning for the country. So if any climate event happens, it hits the agriculture sector the worst. Then we have water resources. Obviously, agriculture is dependent on the water resources, and we are facing um, uh, water security issues, food security issues. The water resources are getting scarce. It accounts to 25% of the country's GDP. Indus River Basin provides water for 90% of the food production to the country. And these are the most vulnerable sectors. This is the kind of climate shocks that Pakistan is experiencing in short term, as well as it's going to be very serious in the long term, if we see. Next slide, please. Next slide. Thank you. So here I've shared some national international commitments that Pakistan has made. The previous slide, please, where we are sharing about the NDCs. Yeah. Pakistan national determined contributions. We have committed 50% of GHG emission reduction with the international community by 2035. where 17% is unconditional through our own resources, and 33 is dependent on the climate financing from the international um, jurisdictions. And we have estimated, the World Bank has estimated a total investment gap of 565.7 billion to meet this climate-related financing gap that we have. Next slide, please. Next slide, please. Thank you. That is the introduction of the framework. This is the actual introduction to the framework. So the spelled objective of our risk management guidelines is to integrate climate-related financial risk considerations into governance, business strategy, and risk management frameworks. DFIs and microfinance banks. And when we say it is applied on banks, DFIs, and MFBs, we definitely have applied the principle of proportionality here, considering the complexities with the banks and DFIs, whereas the small size of the institutions as for the microfinance banks are concerned. Then in our framework, we have given this implementation target. We all know that, as Cyril also mentioned, that it has to be, in a phased manner. So what we have given the timelines is, we have given the timeline that it has to be implemented by 30th June 2029. We issued these guidelines in late December, last week of December to be precise. And we gave this timeline that by 30th June 2029, it should be implemented, with the implementation plan to be received by State Bank of Pakistan by 30th September 2026. So at the moment, the financial sector is working on the implementation plan, where State Bank is also providing all the required support to the financial sector. And we are having one-on-one discussions with the financial sector, and we are completely on it, to have an implementation plan by the industry by 30th September 2026. And this is not an easy task, definitely, and that's why we are pushing it from the very start. We, in our framework, in our guidelines, we have provided a basic guideline that the implementation plan should include at least the following: the governance structure, policies and procedures, the integration into existing risk management framework, integration into existing stress testing frameworks, and capacity building. So these are the 5 aspects that the banks have to report us and provide us through an implementation plan by 30th September 2026. Next slide. Moving on to the structure of the document. Okay, let's discuss the climate risk drivers first. So in this in the document, we have first, because these are I really want to mention this and emphasize this, that these are just the guidelines as for now. There are no regulatory interventions for the moment, and we have tried, as a central banker, we have tried our best to keep the guidelines very simple, in a way that it's easily understood industry wide, and so that the transition into and this acceptance of that and of the guidelines is easier for the industry. Because when we are taking the entire industry together, there are big banks, established ones, and there are small banks as well. So since it was a new guidelines, it was the first time, so we wanted the guidelines to be simple. So here the guidelines starts with describing the climate risk drivers for Pakistan that we've already discussed in the form of what kind of physical or shocks Pakistan is exposed to. We have mentioned in our document, indeed, as in in an extra form, that these are the kind of physical and climate risks and the transition risks that Pakistan is exposed to, and we have and how it is transmitted into the financial system. So we talked about droughts, floods, as physical risks, and carbon pricing and green energy transition policies as part of transition risks for Pakistan. And obviously, the technological shift to greener alternatives as transition risk for Pakistan. When we see chronic risks, definitely we see that there is a risk of sea level rise. It is consistently the sea level is increasing in Pakistan, and there is a lot of changed rainfall patterns that we see, ocean acidification, right? And obviously there is changing in the consumer preferences with time that we see, and that is the transition risk that we face. Then next slide, please. We'll see some how in given some example for the industry to to understand and relate to the how it is transmitted into the system. For instance, we sorry, the internet connection is unstable. Am I still there?
Yes, Usma, you are here, but yeah, we missed you like for 1 minute.
Okay, you missed me. Yeah. So, shall I continue? Can you hear me?
Yes, we hear you now.
Yes, we hear you well.
Thank you. So, for credit risk, we've given this, this entire chart is there. There is a little typographical error here in the slide because I have copy pasted the operational risks twice. So just bear with me on this slide. So it's just credit risk, market risk, and operational risk, and how it is transmitted into the financial system. Reduced income due to climate events, obviously it's going to hit the repayment capacity of your borrowers, and likely collateral value going to go down. Market risk is repricing, asset repricing risk that is there. Then we have operational risk where damage to the property, data centers, because of the extreme weather events. So this is what we've, as an example, we have just annexed in the guidelines that we've asked the industry to follow. Next slide, please. So this is the structure of the document that we have. Governance and oversight. Number 2 is the internal control framework, liquidity and capital adequacy, then risk management processes. Okay, the monitoring and reporting is part of the risk management process section, but since it carries a lot of significance, so I have written it here as part of a section so that I can cover it in the slides properly. So climate stress testing and scenario analysis, it's the last section. This is how the document is structured, and it's kind of similar across jurisdictions that I've seen, and probably this is how Cyril's presentation also looked like in terms of the structure. So next slide, please. Governance and oversight. The document advises, guides the industry to have a strong governance structure where the board understands how climate risk drivers like physical risk and the transition risk affect their business in short term, medium term, and long term. They should understand how the climate risks are translated into their business. Establish board committees for effective oversight and for periodic review of internal reporting by management committee. Set responsibilities for board committees and the senior management for management of climate-related financial risk. It's the board responsibility to ensure integration of climate-related financial risk into institutions' risk management framework, risk appetite, and internal control frameworks. And for the senior management, we have defined the roles and responsibilities that the senior management should possess skills and experience to understand climate risks. And it is the job of the senior management to establish management procedures related financial risk along with effective accountability mechanisms. Ensure alignment of climate-related financial risk strategy and risk appetite with overall institutional objectives, and to establish systems for collecting, monitoring, and reporting climate-related financial risk, implement capacity building programs, escalation, and mentioned this in our guidelines that the reporting should to the board should be at least annually. This is an important aspect to note. We have defined, generally the document keeps flexibility in mind, but here the reporting that we have defined that at least annually the board should be informed. The senior management should inform the board and report climate related financial risk management aspect. Next slide, please. So over to the next section, that is of internal control framework, where the document outlines, rather it prescribes the industry to outline roles and responsibilities across 3 lines of defense. That is the business line, from the client onboarding till the monitoring of the transaction. Then the risk management next area where then to independently conduct climate risk assessment and monitoring, an internal audit to see if business lines and risk management controls are effective enough to manage climate related financial risks. Next slide, please. Capital and liquidity adequacy. There we have put in the guidelines where we have provided the guidelines to the industry to incorporate material climate-related financial risk over relevant time horizons, like different time horizons like medium, long term, and short term, into the capital and liquidity adequacy assessment processes to see and incorporate material, physical, and transition risks over relevant time horizons into stress testing framework. We want to see the resilience or in terms of capital and liquidity positions, and we have incorporated in the stress testing framework, and to develop risk metrics in where they can include risk limits, thresholds to manage material climate-related financial risk in line with its board-approved risk appetite statement. Next slide, please. Next slide, please. This is the risk management. The lengthier in the document, where 3 main areas that material climate-related financial risk into overall risk management framework. By that, it means that the banks are required to establish processes to identify, measure, manage, monitor, mitigate, and report material climate-related financial risk. And their risk management framework must include clear criteria and thresholds for identifying material climate risk drivers. Assessments should be on short, medium, and long-term horizons for capital and liquidity adequacy. For physical risk assessment, they can use publicly available data. There are a lot of data gaps when it comes to climate-related data, and same as it's globally it's a climate challenge, basically the data gaps that we have. So here in our guidelines we have indicated that for physical risk assessment they can use reliable data, or they can use proxies from reliable sources. And we have also indicated that in Pakistan we have this NatCat model. This is developed by one of the government agencies, and it's National Disaster Risk Management Authority and risk National Disaster Risk Management Authority and National Disaster Risk Management Fund. These are two agencies, the government agencies, which are working, and one of is working on the geospatial climate data. And so we have indicated in our guidelines that banks can make use of that available information, which is also reliable, backed by the government authorities. So for transition risk, we have indicated that they may use available emission data or sectoral data from reliable sources. Incorporate results of climate stress testing and scenario analysis into institutions' overall risk management process. Management framework must include a material overall risk and review processes, identify and assess concentrations of exposure by sector, geography, counterparty risks. In the advised about the identified climate risk. That is, establish and implement plans to manage and mitigate identified material risks, shall regularly review the effectiveness of implementation plans as well. This is what we have so another important aspect is integrating of climate-related financial risks in core risk categories. Next slide, please. Yeah. The risk management process covers this important aspect where we saw in the last slide, where we spoke about what the risk management framework must include, and how to identify material climate-related financial risk, and about the management and mitigation of such risk. An important aspect is about integrating of such risks into core risk categories, that is credit risk, market risk, liquidity risk, other risks, strategic risk, it could be operational risk, right? For in credit risk management, for enhanced due diligence, address climate risks in credit risk policies and due diligence processes, and to consider options to mitigate risks such as adjusting credit criteria, developing corrective action plans in in discussions and consultations with the borrowers, and to after understanding and try the kind of problems and the risks, and explain them, and to understand their point of view, and to explain your point of view, and to come up with a situation, a consultative negotiations, and to develop a tailored corrective action plan. Market risk management, where we see the asset pricing aspect. We advise the industry to assess how climate risks. Sure, we'll talk about that. If you share the indicators, we'll take this question in the Q&A section. Assess how climate risk drivers affect asset values in its portfolios. Market risk, evaluate potential impacts on market risk profiles, establish processes to monitor, control, mitigate associated impacts on portfolio. Then liquidity, to see the funding stress, the kind of liquidity stress that the institution could face. For instance, there is a climate disaster and there is credit line drawdowns and withdrawals. To assess and manage the impact of climate risk drivers on is to ensure BC business continuity resilience, business continuity planning resilience, to see the operations of the institutions are not affected. And other risks could include strategic risks or reputational risks that we've kept open in the guidelines. Next slide, please. Part of the monitoring, this is part of the risk management process, but seeing its significance in the overall risk management framework, I have, mentioned it here separately, where monitoring and reporting, the kind of aspects that we have covered here in the document is monitoring and reporting should have reliable climate risk data capabilities and internal reporting systems to support strategic planning and risk management. In case of data gaps that we discussed in the earlier slide as well, use of alternative data sources is reasonable proxies. But when we say reasonable proxies, we mean that the proxies should be applied very conservatively, where the results are not, they're not very distorted. I mean, the proxies should be applied in a very conservative manner. Timely and regular reporting to senior management and board for informed decision making. Reports on sectors, geographic vulnerabilities, non-performing financings, lower level emission data. And we have also given this, since State Bank of Pakistan has already issued green taxonomy for its regulated entities. We have also covered the taxonomy in our risk management guidelines, where we have said that the reports on sectors, geography, borrower level emission data, and we have also mentioned Pakistan Green Taxonomy, where I've written BGD, it means Pakistan Green Taxonomy. So BGD mapped borrower activities, these can be reported as well. So we have written where applicable, obviously where applicable, because we haven't made this the Pakistan Green Taxonomy mapping mandatory as yet. So there would be institutions who would be following, they have started, because we just in last year, like it's not. So when it was issued in December for the financial sector. And since then, it's like, we are having discussions in terms of the capacity of, understanding the taxonomy and how to implement it. So in material terms, we haven't seen much of a progress in terms of PGT mapping. So wherever it's applicable and there is no timeline or no, any stringent timeline or deadline to do that. So then effective system to collect and aggregate climate risk data. So we see that how important in different ways we have emphasized the aspect of data. And if the data is not available, the kind of data that we can use, and there should be a streamlined system, not just ad hocism, but a system should run where it is run where the monitoring is done systematically and the reporting is done systematically to the board. And obviously, we have emphasized that it should be reported at least annually to the board. And we have specified the kind of reports that can be, reported, the kind of data can be shared in terms of sectors, geographies, borrower level emission data, PGD mapped borrowers' activities. This is the kind of direction that we have given in our document. Next slide, please. And next slide is the last slide, where the guidelines also indicate the climate stress testing and scenario analysis. We have the Financial Stability Department of State Bank. They have issued separate comprehensive guidelines on climate stress testing and scenario analysis. And the document of risk management guideline refers to that document in detail, while for the stress testing thing. And climate stress test and the guidelines, the risk management guidelines, they just give the direction that you need to develop capacity for climate stress testing and scenario analysis to assess resilience to both physical and transition risks over relevant time horizons. By that we mean short term, medium term, and long term. We haven't defined the years as such, but it's since we are moving in a very principle based and flexible way ahead with the industry, so we have kept things kind of flexible. Design of climate stress testing must capture key climate related financial risks and reviewed periodically. And if the improvements are needed in the design of climate stress testing, if it is periodically reviewed, it will be it can have an impact on the design of climate stress testing, where it can be improved further over a period of time. So these were the guidelines, and I just want to end my presentation. This is the last slide that we have. That I just wanted to put these words here in the presentation, but I'll just the institutions that integrate climate-related risks early will be more resilient, more competitive, and more stable. Those that delay integration may face abrupt balance sheet adjustments. This is just to emphasize that climate risk is a financial risk, and therefore a lot has to be done in this area. Thank you so much, and over to you.
Thank you very
Najwa,
much.
over to you.
Yes, thank you
Thank
very
you.
much.
I
Please
hope
join me.
I hope
Yes.
the time was well managed.
Perfectly, no worries. Thank you very much. It was really interesting. Please join me in thanking Uzma for contributing to our meeting today, despite the challenging situation in Pakistan, the law and order situation in Pakistan. So we truly appreciate your support and commitment and your sharing of the experience of the State Bank of Pakistan, where you have a more supervisory driven approach, quite flexible. It was quite detailed and very insightful for all of us, I assume for me too. And we've learned a lot on how you've been prescriptive on the data sources, on the proxies, and how supervised entities could easily build up the tools and methodologies, models to assess and manage climate-related risks. Please also join me in welcoming Dr. Eliki Boletawa, who is joining us, honoring us with his presence to the meeting today. We are really fortunate to have him also with us in our meeting today. With that, I think that we've had some questions in the chat box, both to Cyril and Uzma. So I'll try to start by the first question from Similen. I'm sorry if I misspell your names. It was for you, Cyril, on the Central Bank of Seychelles. If you could share a bit more on the data that is collected on the return. Over to you, Cyril.
All right, thank you, Najwa, and thank you for the question. So, for the disclosure template, basically what we've done, we've more or less mirrored what is in the Basel voluntary disclosure framework. So, in that document, there is an annex to it, whereby in terms of what type of data you need to collect from the regulated institutions. So in terms of the qualitative data, it's basically what is in the guidelines. For example, they would be required to describe how the board has sort of integrated climate-related financial risk within their frameworks, training that is being done, what policies, frameworks, and the likes. So we basically just list down what are the requirements for them to describe, and then provide a sort of like they are required to provide a response where they're at now. The template, we're using it more as a stock taking exercise rather than sort of a regulatory reporting. And for the qualitative sort of quantitative sort of information, so for physical risk, it's more so just capturing data within terms of climate risk exposures per the different districts that we have in Seychelles. So I think we have 26 electoral districts. So based on their loan portfolio that they currently have, so they map it out in terms of the different regions and put it as a sort of like a gross amount. And then as a percentage, so until, we will have the figure from the total loan portfolio per district, what is the percentage? And in that element, what is the level of sort of non-performing exposures, as well as the level of maturity. For the voluntary framework, it also requires for you to capture GHG emissions. But as I've mentioned, within the context of Seychelles, we're not adopting S2 standards yet. So we've not included that element within the disclosure template. For the transition risk element, we're not looking at it from a sort of a district level exposure, but more so in terms of our internal sector classification that the banks report their loan classification. So it's the same type of information that we're capturing, but in terms of sector classification, for us to identify which sectors now, aside from just districts, what sectors are more prone to, the climate risk exposure is more higher in terms of which sector. Just to advise that, as I've mentioned, this is a sort of a stock take template that we have, but we also did introduce an offsite reporting template, which captures sort of like loan portfolio, investment portfolio, provide details about stress testing that the bank, the regulated entity is doing. So as part of the engagement, we are open to share all of this with you because it is publicly available on our website, but you might not have access to it. So we can share all of these with you that you can use as a point of reference for your own work that you're doing within your jurisdiction. I hope that clarifies. Thank you.
Thank you, Siri, for answering the question in enough details and for kindly proposing also to share this with all of us. Thank you very much. I think we have also one other question for Uzma from Latu. Grateful if you could share also a bit on the indicators or type of data collected in the risk metric. Thank you. Uzma, can you hear us?
Yeah, Najwa, the internet connection
Do you
is a
want
bit
to repeat?
unstable.
Okay.
Yeah, I'll take this question of the indicators
Thank
and the
you.
metrics, right? Actually, as I just the document shared during the last week of September industry, we are we haven't provided any standard template. We've kept this open, and we are basically discussing. We have given examples rather in the document where we have identified for the physical risk, banks are required to assess their portfolio against flood prone areas. For transition risk, they should assess the GHG emissions. They can have this like NPL data, right? But we are we don't have a standard template for it. As for now, we have kept it open for the institutions to develop their own. and we are closely, monitoring, because it's a very new document to be circulated amongst the industry. So this is how it is.
Thank you very much, Uzma. We have also another question to you. I think this refers to the taxonomy from Latu again. PGT mapped borrower activities. Does this mean the same as the technical screening criteria?
Yeah, for broader understanding, you can say that yes. Actually, the banks would be required to map their portfolios in terms of the PGD definitions, the Pakistan Green Taxonomy definitions about which activities are green, which activities are amber, and which activities are red. So this is the first thing after, the taxonomy document is out. They are required to, basically, we are through moral suasion, we are insisting the institutions to map their portfolio against the Pakistan Green Taxonomy, because we don't have any regulation as such to basically, enforce any instructions on the industry. Thank you.
Thank you, Uzma. Please do not hesitate to share your experiences, raise your hand, write any questions that you may have in the chat box. I've also seized the opportunity of you to also reflect before sharing your thoughts, to share a bit about our experience in Morocco. We've also been through a progressive paced, quite flexible approach when it comes to regulating climate-related risks and disclosures. And same as in Seychelles, we have tried to address in a balanced way national priorities with international standards, and we have also implemented the S1 only, climate-related risk disclosures. We have also we have always been proportionate when it comes to implementing regulation on climate-related risks and having revealing disclosures, starting by banks. So smaller institutions will be the next step forward. So we have started by banks because we are mindful of the capacities that smaller institutions would need to develop, the data and tools they would need to build up internally before being fully compliant with our regulation, also to make sure we're not having any exclusion policies. So because the Central Bank of Morocco, it has among its fundamental missions also the support for financial inclusion. This is why we have not been supporting direct allocation instrument to specific sectors, because this could end up into excluding smaller institutions from getting financing from the commercial banks. So we're trying to figure out the optimal policy mix where we can at the same time safeguard financial stability of supervised entity, but on the other hand also not eradicate the hardly won gains on financial inclusion. So we have actually issued one first directive on climate-related risk management principles, aligns with the Basel Committee principles, same as in Seychelles, and the NGFSK recommendations that came up first, but also some of the most inspiring and advancing central banks by that time. It was in 2021. And it was also a progressive approach where we required banks to integrate climate-related risks into their governance structures, to involve the governance bodies, to implement the necessary analytical tools, to make sure that they have the necessary processes and policies internally, to also seize the opportunities of green financing, but doing it progressively as the capacities and capabilities evolve internally. And when we came up with the regulation, we also have pursued supervisory dialogues to make sure that we are mindful of the challenges that banks are experiencing when it comes to complying with our rules. And we had also to move forward with supporting them by capacity building actions. So we have leveraged international expertise of our partners, trying to support banks through several capacity building actions on being compliant with our regulation, because unfortunately we weren't as prospective as in Pakistan, and I'm really quite inspired and impressed by the journey. It will be definitely one of our benchmarks as we move forward, because we've been also only having high-level principles. So it was actually a learning by the win experience. So when the bank started implementing, we had different approaches, diversion processes, and we have today the challenge of harmonization and conversion the practices. So we're trying to be more prospective, providing more technical guidance, referring to specific frameworks, either national or international one, as we are still working on our green finance taxonomy. And for disclosures, we have been also quite flexible. We are implementing S1, but we are working with the support of the World Bank on having specific templates with indicators. And I've seen that this came out very, very usually in discussion. What are the criteria? What are the indicators? And same today, this one was one of the main questions from you. We need to be really to gain clarity and be precise on the indicators, on the metrics that banks should report on either to the central bank or through disclosures. So today we're trying to establish specific templates and define with the banks, because we want it to be feasible and pragmatic, but also be realistic, because being ambitious is good, but we need to also be somehow realistic. So we are working hand in hand with banks and with the World Bank that brings the technical expertise to put up together all the templates on the indicators, the metrics, qualitative and quantitative metrics, because international standards, especially ISSB ones, have been very indicative when it comes to transition risks, but less on physical risk. And same as in Seychelles and Pakistan, where we have greater exposures to physical risk. So we need to do it by our own and try to figure out what are the most relevant indicators and metrics that banks need to work on in order for us as a central banking sector supervisor to have this risk-based approach to seize where the excessive and most significant exposures are, and to implement the necessary corrective actions. So I'll stop here. If you have any questions, please do not hesitate to share, to ask now, or reach out to me directly after our meeting. With that, I think that we have, Laura, could you confirm that we still have 5 minutes for a second round of questions, or if you need us to already conclude?
Yes, we have.
Perfect. So I'm sorry, I was thinking about one question that could fit to both of you, Cyril and Uzma, given your quite similar but sort of different experience. From your perspective, what do you think would be the most pragmatic approach as a regulator we can adopt when climate data is incomplete or inconsistent to make sure that supervised entities are fully compliant with our expectations? Because as a regulator, we set the rules, but in the climate space, it's quite challenging for the supervised entities, even the bigger ones, to really abide by the rules. So how can we ensure that these necessary prerequisites that are data and are actually lacking all around the world, not only in developing emerging countries, what would be the best pragmatic approach and optimal one to adopt as regulators from your perspective, or also your practical experience? Isma, if you want to come first, or Cyril.
Thank you, Najwa. That's a very important question, and I tried to cover it a bit in the presentation as well, because in the document as well we have this is the kind of challenge that globally central banks regulators are facing in terms of the data availability issues. So we have kind of tried to capture this aspect in our guidelines as well, where we have given these guidelines to the industry that we, because the first thing that the first kind of response that there is going to be is we don't have the required data to act on. So what to do next? So there won't be any progress in the matter. So to basically encourage the industry, we have indicated in the guidelines that wherever the gaps are there, you can use the publicly available resources, the data sources, and you can use and as I mentioned earlier, we have NatCat model here in Pakistan. It is it is backed by the government agency. There is this agency named National Disaster Risk Authority, National Disaster Risk Management Authority, which is working on the geospatial climate data. And we have advised the industry to make use of that publicly available data, as it is considered to be the most reliable local data that is there. So we have mentioned that local, and then we've kept it open. Obviously, we are going to learn as we move forward in the process. And with this reply, I just want to mention that here it's 29 past 6, and in like next 5-7 minutes, we'll be ending our fast here in Pakistan because it's Ramadan and we are fasting. So it's just
Yes,
I'll take
yeah,
a,
you same here.
a
We don't
half
take
minute break
longer
just
from your
to yeah.
Yeah, we're also fasting in Morocco, but we still have some time actually here in Morocco before we break the fasting. So we don't want to take you any longer. It was really nice to hear from you and to have your very insightful contribution. And yes, I think that we can. If you want to leave, it's okay. I mean. Thank you very much. Please join me in ultra round of applause.
I still have 5 minutes. We can take
Okay, perfect.
yeah.
One last question, maybe.
Thank you so much.
Before I say, okay, thank you very much. This is highly appreciated.
Yeah.
Cyril, if you want to come up also rapidly on that briefly, if you have any additional insight.
Yeah, sure. Thank you for that, Najwa. Within the context of Seychelles, similar to Pakistan, we also have a sort of a government department that has a what we call a WebGIS portal. So there is geospatial data from that portal that the banks can extract. As much as possible, what we've done with our offsite sort of reporting template, it was more or less a very frank and open engagement and discussion with the regulated entities. So what we've done for now, the only sort of granular data that we're capturing is in terms of where the sort of the facilities they're financing in terms of their specific location, as well as in terms of their distance from sea level and height from sea level. So from that portal, they are able to extract that information. But again, it might, because they're not sort of familiar with that portal, we also coordinated for them to meet with that department, for them to conduct a training to the regulated staff of the regulated entities, for them to be able to understand how to track that information. But obviously, there is still a bit of that data limitation. So within sort of that reporting template, we're not requiring them to provide specific sort of measurements. So we've given them thresholds so that they can input within the reporting template. Also, again, given the data limitations, if they're not able to extract the information, for now they can, link it as not known information. And then as things progress and we work with relevant stakeholders, we can build on that information. Because in December, we also initiated work on doing a climate data gap analysis. So we've built a strategy in terms of what are the different data gaps and how we would address those gaps going forward. And one of it is for us to have a national climate data working group, whereby the relevant stakeholders, both private and public, including the Statistics Bureau, to be part of that engagement to see how we can have sort of like a specific point whereby all of these data can be reported and captured, and the entities can go directly to them rather than having to, try and access public available information in different areas. So the discussion is to go towards having that entity take up climate data, and then everybody can get access to that information. Because even the Department of Climate Change has a lot of information, some of which are publicly available and some are not, and the entities don't necessarily know where to go to get those information. So there is already that discussion for us to have all of that in place as one sort of focus point where everybody can go to get this information and limit and address a bit of those climate data gaps. Thank you.
Thank you very much, Uzma and Cyril. This concludes perfectly our session. And I think that one way to really overcome data limitations would be the industry engagement, collaboration and support of supervised entities, and having this public-private collaboration to make sure that we are utilizing publicly or public available data. So this provides really such inspiring journeys to all the participants today. In Morocco, we have a different approach. Maybe we should also think about having this institutional governance at the national level around climate data, because I'm sure the data is not lacking. We're just not searching in the right direction or in the wrong places. So thank you very much. In Morocco, we are also having the industry engagement, the collaboration, but also ask for banks to collaborate with their clients. Maybe we should have a different layer of collaboration also inspired by both Pakistan and Seychelles experiences. With that, I think that we can conclude our today's session. I know that the time is not enough to discuss this, but I'm sure that I'm quite confident that we would have other opportunities and chances to discuss this in further details. Please join me in thanking both Cyril and Uzma for contributing to this session and sharing very insightful, informative journeys. And we sure would keep in touch with both of you if we have any additional comments or questions. Thank you. Thank you very much. Over to you, Laura, if you have anything to say before we conclude. Laura, can you hear me?
Sorry, I was muted. No, thank you very
I had
much.
any technical problems, so I'm reassured. Thank
Yes,
you.
no, so sorry, just because I am seeing two screens. My apologies, I was speaking. No, thank you very much for this wonderful panel. As I mentioned yesterday, and part of the results, we are seeing how many members are moving towards the adoption, development, and implementation of this climate risk or climate-related risk guidelines. So it's very, very timely, very, very good opportunity to listen to other two examples. And yeah, I think that as part of the subgroups, this topic will be still speeding on for some time. So maybe we can organize more sessions on this topic. So thank you very much. And now, we are moving towards our exciting session. But for this one, let me do my magic. I hope that I can do a good job being DJ. So give me 1 second and let me share my audio.
Please lower the sound of the music because we can't hear you.
Okay, great. Is that okay?
It's better now.
Perfect. Okay, with this we are moving towards our very exciting session, that is the working group recognition. So we are starting with leadership and contribution. And this category recognizes members that actively contribute to developing subgroup deliverables and acknowledges leadership roles and facilitating efforts under the working groups. And in this case, we are having as a special control our achievers are members that are appearing on the screen. So please join me to give a round of applause to all of them. And we have had a very, very active year. So we are also having this group of members. Thank you very much, because you contributed in different ways, either reviewing the knowledge products, presenting some of the information, or providing some,
Perfect. Treat yourself today.
Oh,
Shop
thank you.
Lazada's Raya sale.
or providing, oh gosh,
Detia.
some in-depth interviews. So thank you very much. And with this, I would like to come up with our top achiever. That in this case is Rodora Brasil de Vera. Thank you very much. She contributed to several in-depth interviews. Also, she was leading two groups, and also she was taking part in two webinars. Thank you very much. And now we are moving to the next category, that is the peer reviewer. This category recognizes members that exposes the efforts and knowledge exchange and sharing through dedicating the time and review and comment on other members' country policy intervention. And also we were quite active in this one, so we have our following achievers. And please join me to also provide a round of applause to all of them, because the technical reviews were very, very helpful for our members countries. And with this, I would like to recognize our top reviewer, top achiever, that is Mr. Chaudhry Liaquat Ali. Thank you very much, Walid, Chaudhry. Chaudhry also was reviewing the station's guidelines on risk management, climate-related and environmental risk, and Zambia's green finance taxonomy. Thank you. Now we are going to the dissemination of knowledge products, and this category recognizes members who proactively disseminate working group knowledge products and adopt them with their jurisdiction. Here are our achievers, that is Ms. Rodora Brasil de Vera, Francis Achiever, and our top achiever this year is Mr. Cyril Benoit from Central Bank of Seychelles. Thank you, Cyril. So he was supporting a lot of knowledge products again, but he was also leading the one on biodiversity and provides some in-depth reviews, in-depth interviews for this knowledge product. Also, he provided very high-level technical comments on several knowledge products, and and also related to housing finance. And now we are moving to the in-country implementation. This category recognizes members who proactively support successful execution of ICIs of fellow members' countries, and our executive here was Mr. Mesa Wasta, our former chair, Ms. Ingrid Tudiso, and Ms. Cadenda Cabusha. And our top achiever in this category is our chair,